Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It's Tuesday morning, not Monday, coming back after a long 3-day weekend, September 8th, 2020, and the market actually got hit pretty hard last Thursday and Friday. A lot of people will say it was way overdue. I know a lot of professional traders that were shorting saying the market was way overdue. Lost money on the way up, made most of it back in just a couple of days on some pretty heavy selling. Looked like we closed strong last week. We still closed below the open, but now the futures markets are actually down again this morning. So we are kind of in capital preservation mode. If you watch the channel on a regular basis, every single day we split education with trade setups. And today we are what we call less than perfect scenarios. We're actually well offered on a lot of charts. We closed below the open on a lot of charts. We closed negative on a lot of charts. So there's going to be a lot of people chomping at the bit to want to get back in and buy. Hopefully you had discipline. We spent a lot of time in the last month and a half, especially with me as an experienced trader, telling you you need stop losses. You need stop losses. And everybody's like, no, the market always comes back. And I personally know a few traders right now that are getting into the boot camp, and specifically getting into the boot camp because they did not have discipline, did not have a strategy, and now they're sitting on massive losing trades, hoping the market comes back. Odds are eventually it probably will, but what's going to win out? Your buying power versus how long the market can come back. It's just not a good strategy. We talk all the time about scale out or get out. You can always get back in, but there seems to be this thought process that if I get out of a losing trade, I'm going to miss out on profits. What you're going to miss out on is having your account decimated. If you hang on there, you're going to miss out on being in the market because you're not going to have an account anymore. So what does that all mean for today? What that basically means for today is we're not in super aggressive mode today. What's going to be interesting today is the lower opening in the market testing the previous day's lows. If we actually get down that far, hopefully we won't, because the SPY actually closed pretty far off the highs, off the lows, excuse me. The first push down and then the second push down, do we actually form a double bottom where buyers step in and say, enough, we're ready to start buying again? Or do we continue just to see well-offered price action where you really need to just step back and be okay with not doing anything if you're an active trader? Now, I'm going to warn you, it's a pretty strong word, but if you're not comfortable, if you're not seeing a clear picture, don't trade. I can't stress this any more deeply. Don't trade. The bell does not mean ding, 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 go place trades. Whether you're day trading, swing trading, position trading, it doesn't make a difference. If you want to start building a longer-term position, dip your toes in there. If you want to start building a swing trade and you see signals, that's the key, and you see signals, dip your toes in there. But my point is this: if you really want to elevate your trading, if you really want to get to the point where you're making money every single month, like clockwork, month after month after month, you have to understand when to size up and hold longer, and you have to understand when to size down or be in cash. And right now we are in less than perfect conditions. There are some interesting pockets of opportunity, though. The financials specifically closed positive again last week, and we're actually going to start by taking a look at the SPY, and then we're going to go into looking at some of the financials. We have roughly 8 stocks we're going to take a look at today. There is one sector that is just getting beat to a pulp, and it actually looks like it's going to get worse this morning, which is ironic because it was the strongest sector by a mile during the crux of the pandemic. So if you like these videos and you find them helpful, definitely click down and subscribe, and absolutely come back every day for updates. So we're going to take a look at the screen. We're actually going to start out with the SPY, and you can see how the SPY closed a pretty decent level off the lows. Intraday, we actually had a nice bounce, but the problem was we couldn't get back above the opening price. Now, again, this is a pretty significant bounce. It bounced almost $12 actually off the lows. That is typically short covering. We need a fast move off the lows after a lot of selling. That's short covering. The only way to determine whether or not new buying comes in is typically end up going sideways for a period of time on quiet price action, and that's not what we got. We actually got a violent move to the upside. It was pretty quick. So now we're actually heading back into the day, and you can see the futures markets right here getting just hammered pretty hard. I got September and December here because September is going to be expiring soon. But you can see that we're actually down. Let me actually pull that up just to give you some context. We were actually up earlier during the day, and pre-market, obviously it's 3 o'clock in the morning, but we're getting hit pretty hard right now. So what is the play for today? The minimum criteria you want to see today is you want to see your stocks trading positive from today's open. The best case scenario, you're going to watch and see any stocks that close strong on Friday, which there were a few. If not, you're going to have to tiptoe your way in and just really preserve your capital and build a position a little bit less aggressively than you might have on the way up when the market was just rip-roaring to the upside prior to these two selling days. So look, this is a part of trading. If you can't handle not doing anything when the market's less than perfect conditions, then you're just not treating the business respectfully, because there are days when there's nothing to do or very, very little to do, and weeks, quite honestly. Everything is not perfect, and you have to recognize the difference between perfect and less than perfect, and pull back, and or when it's good, scale up. So we're going to take a look at some opportunities now, and specifically I want to talk about one that's not necessarily setting up as a trade yet, but definitely something that has me sitting up in my seat saying, hey, what's going on here, is JP Morgan. Now, the entire sector has just been garbage, and I've been saying it's garbage from a trading perspective, but this is a stock that I absolutely love to trade. And now, for some reason, it's just continuing to start showing a little bit of buying, and you can see that Goldman and JP Morgan were both positive on Friday in a day that the market was negative again. And this is kind of the level here. So I have an alert set for 105.50. If we get above that level, it's not out of the question that we make a run at 116. So have JP Morgan 105.50 set as an alert. SpaceX actually had some news this morning. You can see it's up 28 cents, not a big move, but they basically scheduled another launch. I don't think it's tradable. BYND actually came out with news this morning in China. Look, if they have to go to China for news, I don't know. I'm telling you flat out, I'm not going to be trading this morning. As a matter of fact, if it has a monster move to the upside, I might actually look to sell it short in the 136 area if it gets up to that level. So those are a couple of trades that were just really kind of mapping out as not necessarily opportunities yet. The sector that I do want to talk about that's just been shellacked is the stay-at-home sector that had benefited from the pandemic, where everybody was just not going out and ordering online. You could see OSTK has almost, if not more than that, taken a 50% haircut. If you're not a trader or an active trader, 50% haircut means that the stock was at 100 and now it's 50. So that's a 50% haircut. In this case, the stock was 128 and change, if I'm not mistaken. Let's get the exact number, 128.32. So down to 60 and change on Friday, 63 here. So a 50% haircut. This stock has just been spanked. So getting along within that sector, seeing the same thing happening where the buying is just not as consistent. And we called this. We actually called this on the weekly charts where they just weren't obvious anymore. DocuSign is another one. So what I'm basically saying here is that these are ideas that are not as obvious as they were here during the height of the pandemic up into July and even the beginning of August, quite honestly. So can you look to trade them? Yeah, but are they the best ideas on the board right now? No, absolutely not. And Etsy will be the last one that we discussed there, rounding those trades out. You can see that they're just not this. They're making lower lows, lower highs, and we closed off the lows on Friday, but they're not perfect scenarios. That's the biggest point that I want to get across here is perfect scenarios are where you make the consistent money. If you're looking to trade these, believing that they're going to recapture those all-time highs that just came from, it's absolutely imperative that you work the order with lower share size and get feedback from the market. It's not the same aggressive trade it was on the way up. There were, however, some stocks that closed positive on Friday and near the highs. SHLL is one that we're looking for, so we're actually looking to initiate a new swing trade long in this stock, and I will be day trading it as well. Groupon is one that actually hit a target last week, right up in this 35 area, and now we're pausing again, slightly lower opening. So we have an alert set for a swing trade in Groupon over 35, maybe a little resistance at 40, but then looking for a 55 target. Tesla is one that a lot of people are in pain on this stock right now. And look, the bottom line is it closed strong on Friday. We were looking to be bidding the stock again today as a day trade. I'm not looking to swing trade the stock right now. I think the tape has changed a little bit. However, here's the story here. A lot of people that I'm personally speaking to have been long the stock for a long time, and you need to separate. If you're investing in this stock as opposed to trading this stock, you can't be watching the day-to-day fluctuations, because investing is not day-to-day fluctuations. Investing is where do you think the stock is going to be 3 to 5 years from now, and you're watching your paper profits go up, go down, go up, go down. In this case, now the last week or so going down, and it's driving you crazy. That's because you're not separating whether it's an investment from a day trade. From a day trade perspective, it's an unbelievable stock, an absolutely incredible stock. Same thing as Apple. But you have to separate what you think is an investment from what you think is a trade. I'm also still day trading Apple. Actually, Apple triggered a small portion of a swing trade on Friday. We actually laid out, you can go back to the video, we laid out a very detailed scenario where we said we were looking for a bullish U-turn on the daily chart to initiate a swing trade in Apple, which meant that you need to close traded below Friday's low, reversed back up, closed above the open, and closed above Friday's low, which it barely did, but it did. So it initiated a small piece of a swing trade. Next, we have CZR. CZR, actually, we've had this one in the list for a while, and you can see here, 48 was the level. It's closing a little bit below Friday's high, but look at where we are. There's plenty of room to go in this trade. This is the opposite. This is actually getting out of the house stocks with plenty of room to go. So we're looking to initiate a swing trade. Now, again, these are breakout trades. Breakout trades are a little bit different than trading a stock that's pulled back. You get a nice entry point. It starts moving in your favor immediately. You're going to have to massage breakouts. Normally, breakouts work immediately, and the ones that don't also fail immediately. And that's just a part of trading breakouts. I really love this as long as it stays above 48. JD is another one that closed strong on Friday after having a really strong 2 weeks. I love the fact that it punched through the lows on Friday, closed strong at the end of the day, and now we're going to open up kind of like right in the middle of the trading range. So I still like this one long as well. A few stocks that are strong stocks with a weak close that I still like as far as swing trades. EAT is one of them. The stock could really drive you crazy because it doesn't move that quick, but we actually discussed it a little bit in the boot camp on Friday that it's moving clearly. It's just not moving like Apple or Tesla or one of those other stocks. Just because it's slow, it doesn't mean to get out if it's actually still working. And this was not a coincidence. We're going to go from EAT to cake. I did not do that intentionally, but a strong stock with a weak close, and you can see we're kind of opening neutral. Really, this breakout over 30, looking for a run to 37, 38, and then ultimately to 42. Again, not a fast mover, but I do like the fact that these are now the get out of the house stocks that are starting to see a little bit of buying. I know somebody last week called out RCL as well. So again, you got to start to really. It's interesting. We got to ask the question in the boot camp the other day, over the weekend actually, about how fast sector rotation's happening and how do you stay on top of it. We got to make a big list. You got to do a little bit extra research. When it's obvious and everything's flying in one direction, it's not that difficult to pick a few stocks and be on top of those. But when sector rotation is changing, you really need to take your time to do your game planning like we're doing now. CRM is another one that actually had blowout earnings and closed weak. So this is actually going to end up opening somewhere between Friday's close and the low from Friday. So again, strong stock, weak close, pulled back for a few days after earnings. Earnings were great. I'm looking to be a buyer of this stock. And EW is another one. This is actually a pretty good scenario where it actually broke out. This was called out in the community actually. Broke out, held the 82, and looks like it'll stay above that as well. So look, there's a few opportunities there today, but I'm just flat out telling you, every scenario is not perfect. Can you find some knucklehead saying, yeah, every day is a day to trade? No, it's not. Sometimes you have to be in cash. Sometimes you have to be a little bit lower in your exposure. And some days you're just managing trades and or reducing positions. So that's reality. Anybody tells you there's something always to do is probably not actually ever quit their job to become a trader. That's just reality, because if you're trading hard and heavy every single day, especially when the market is not crystal clear, that's the fastest way to be separated from your capital. So listen to me. I'm telling you, I paid for those mistakes over time through my own trading. Be disciplined. Wait for A+ opportunities. And if you start to dip your toes into some of these stocks that were really strong that pulled back, work those orders, reduce your initial share size, and get feedback from the market. Have a great day, everybody.